Did you know that nearly two-thirds of Americans can't pass a basic financial literacy test? Yes, you heard that right. It's a staggering fact that underlines a global issue we're facing today. Financial literacy, or the lack thereof, is not just an American problem. It's a worldwide crisis affecting individuals and families, leading to poor financial decisions and even devastating financial outcomes. Without a solid understanding of basic financial principles, people often find themselves in debt, unable to save for retirement, or even manage their day-to-day expenses. The repercussions of this can span generations, creating a cycle of financial instability. But why is this happening? And more importantly, what can we do about it? The answer lies in financial education. It's crucial to equip ourselves with the knowledge to make informed financial decisions. In today's video, we'll be breaking down complex financial concepts into simple bite-sized pieces. Before we unravel the secrets of financial literacy, make sure to hit that like button and subscribe to Uninterrupted Learning. Your journey to financial empowerment starts right here. Now, let's delve into today's eye-opening insights. Why should you care about financial literacy? Well, it's all about your future. Imagine attaining financial independence, free from the shackles of living paycheck to paycheck. That's the magic of financial literacy. It equips you with the knowledge to make informed decisions about your money, helping you build wealth over time. Think about it. With financial literacy, you can smartly manage your income and avoid the pitfalls of debt. You learn to use credit wisely, save effectively, and invest strategically. Thus, you're not just surviving, you're thriving. But there's more. Financial literacy is also about preparing for retirement. Yes, the golden years of your life. It's about ensuring that when you stop working, your money doesn't. By understanding how to plan and save for retirement, you can ensure a comfortable and secure life in your later years. Remember, financial literacy isn't just about money, it's about securing your future. Let's start with the basics. Understanding income and expenditure. Picture your finances as a seesaw. On one end, you have income, the money you earn. This could be from your job, any side hustles or passive income streams like rentals or investments. On the other end, you have expenditure, the money you spend. This includes everything from rent, groceries, and utility bills to your morning coffee and that online shopping spree you might not want to admit to. Now, for the seesaw to balance, you need to ensure that your income matches or exceeds your expenditure. If you're spending more than you're earning, you'll find yourself in a financial hole that's tough to climb out of. On the other hand, if your income surpasses your expenditure, you've got a surplus, which you can save, invest, or use to pay off debts. So how do you keep track of your income and expenditure? Well, that's where budgeting comes in. A budget is essentially a plan for your money. It allows you to allocate your income to various categories of expenditure, like housing, food, transportation, entertainment, and savings. By doing this, you can see exactly where your money is going and make sure you're not spending beyond your means. But don't just set a budget and forget about it. It's crucial to review it regularly and adjust as necessary. Maybe you got a raise at work, or perhaps your utility bills have increased. Your budget should reflect these changes. Remember, a budget is a living, breathing thing that evolves with your financial situation. Balancing income and expenditure is not just about avoiding debt, though. It's about gaining control over your finances and working towards your financial goals, whether that's buying a house, going on a dream vacation, or retiring comfortably. It's about making your money work for you, not the other way around. Knowing where your money comes from and where it goes is the first step towards financial literacy. Have you ever heard of the saying, "A penny saved is a penny earned"? Let's find out why. Saving, in a nutshell, is setting aside a portion of your income for future use. It's like planting seeds today to reap a bountiful harvest in the future. It's not about depriving yourself of pleasures today, but rather about securing a more comfortable and worry-free future. Now, why is it important to have a savings goal? Let's imagine you're on a road trip with no destination in mind. You'll just keep driving aimlessly, right? Similarly, without a savings goal, you may find yourself spending without direction. A savings goal gives you a clear target to aim for, whether it's for a dream vacation, a down payment on a house, or a college fund. But let's add a layer of magic to this: the power of compound interest. It's like a snowball rolling down a hill, growing bigger and faster as it goes. When you save, your money earns interest, then that interest also earns interest. And this process repeats itself again and again. Over time, this can result in your savings growing significantly. This is the magic of compound interest, your money working for you while you sleep. Let's put this into perspective. Suppose you save $100 a month. With an annual interest rate of 5%, you'd have approximately $16,000 after 10 years. But with compound interest, you'd have around $18,500. That's an extra $2,500 for doing absolutely nothing. That's why it's crucial to start saving early and consistently. The more time your money has to grow, the more you can benefit from compound interest. So whether you're saving for a rainy day, a dream purchase, or your retirement, remember this: every dollar saved is a dollar earned. The power of saving is truly remarkable and can have a significant impact on your financial health and future. Remember, when it comes to saving, every little bit counts. Now that you understand saving, it's time to take it to the next level: investing. Investing, in its simplest form, is about putting your money to work for you. It's the secret sauce that has created countless millionaires and even billionaires across the globe. So how does it work? Well, you invest your money in various assets with the expectation that they will generate more money over time. It's like planting a seed and waiting for it to grow into a tree that yields fruits year after year. There are several types of investments, each with its own potential for risk and reward. Stocks, for instance, represent ownership in a company. When you buy a company's stock, you're essentially buying a piece of that company. As the company grows and profits, so does the value of your stock. But remember, the stock market can be volatile, and there's always a risk that the company might not perform as expected. Bonds, on the other hand, are essentially loans you give to companies or governments. In return, they agree to pay you back with interest. Bonds are generally considered safer than stocks, but their returns can be lower. Real estate is another popular investment. It involves buying property and making money through rental income, selling the property at a profit, or both. However, real estate requires a significant upfront investment and comes with its own set of risks, like property damage or market downturns. There are also other investment types like mutual funds, ETFs, and more, each with its own unique characteristics. Now, investing is not a get-rich-quick scheme. It requires knowledge, research, and patience. It's about understanding the market, studying the trends, and making informed decisions. Yes, there are risks involved, and yes, you might lose money. But remember, the potential for growth is also immense. And here's a little secret: the earlier you start investing, the more time your money has to grow. Thanks to the magic of compound interest, even small investments can add up over time. Investing may seem intimidating, but with knowledge and patience, it can be a powerful tool for financial growth. Retirement may seem far off, but planning for it starts today. Indeed, it's easy to put off thinking about retirement when it seems like a distant reality. However, the truth is that the earlier you start planning, the more time you have to grow your savings and the more comfortable your retirement can be. Now, let's talk about pension. A pension is essentially a fund into which you and often your employer contribute money throughout your working life. This money is then invested, and upon retirement, you receive regular payments from this fund. It's like a long-term savings plan with added perks. But what if your job doesn't offer a pension? Don't fret. There are other options available, like a 401k or an individual retirement account, also known as an IRA. A 401k is a retirement savings plan sponsored by your employer. It lets you save and invest a piece of your paycheck before taxes are taken out. This means you don't pay taxes until you withdraw the money at retirement. Quite a neat trick, isn't it? On the other hand, an IRA is a type of investment account that gives you tax benefits for retirement savings. There are two main types of IRAs, traditional and Roth. With a traditional IRA, you contribute pre-tax dollars, and your money grows tax-deferred. With a Roth IRA, you contribute post-tax dollars, but your money then grows tax-free. The key advantage of these retirement planning options is the power of compounding. Compounding is when your earnings generate even more earnings. You receive interest not only on your original investments, but also on any interest, dividends, and capital gains that accumulate. So your money can grow faster and faster as the years go by. Planning for retirement isn't just about stashing money away. It's about strategically growing your wealth so you can enjoy your golden years with peace of mind. Remember, the earlier you start planning for retirement, the more comfortable your golden years will be. And there you have it, your crash course in financial education. If you've gained some valuable knowledge, show us some love by hitting that like button. And if you haven't already, subscribe to Uninterrupted Learning for more insights and tips on mastering your finances. Your future self will thank you. Until next time, stay financially empowered.